These are the 4 essential steps to consistent profitability in your trading. This is my personal conclusion I came to after working with hundreds of traders, again, seeing good traders versus not so good traders. The key factors that very successful traders had were these. The first step to consistent profitability, and by the way, 4 steps to consistent profitability, 4 steps to funding, it's all the same stuff. The first step here is finding or creating a profitable edge. I was very intentional with the language I used when I put these together. Now, some of you might find a profitable edge based on a trading community you're part of. Some of you might find a profitable edge after multiple communities you've been part of. Some of you may take multiple components from different of these communities and put them together, kind of like I have. Some of you might discover your own things when you're testing. It doesn't matter, any of the above. All of them are correct, as long as you have data to prove that your edge is profitable, okay? So you can find your edge, you can create your edge. But at the end of the day, you want to know that your data shows that you have a profitable edge. The second step is you want to define this edge and put it into a mechanical trading plan, okay? Mechanical trading plan. Why mechanical? Well, if you want consistent profitability, you have to be consistent in the way you execute your trading edge. How can you expect consistent execution of your trading edge if every time you come to the market, you trade differently? This setup looks like this setup looks like this. If there's no consistency into the way you execute, you can't expect consistent results. So you need a mechanical trading plan. You want to take your edge, put it into that mechanical trading plan. The third step here is to master your trading psychology. By the way, it's just an overview. We're going to dive into each of these components in a second. The next step here is to master your trading mindset. And there are 2 components to that. We're going to be spending all of this afternoon on those 2 components. The first part is your expectations prior to your trade. This is by using the Bulletproof Your Mindset tool that you're all familiar with. Your expectations before you trade have a huge influence on your decision making and your emotional state after the trade, okay? That's step number 1. Step number 2, A, is your expectations before. B is your mindset after the trade. Your mindset after the trade, if you're in a state of fear after a previous loss, that's going to impact your next trade. If you're in a state of greed after a win, that's going to impact your next trade. So mastering your trading psychology is mastering your expectations before a trade and then getting yourself back to a state of equilibrium before your trade, after the trade, right? If you're in a greed or a fear state, getting yourself back to the state of equilibrium. Now, both of these, before and after, your expectations before and your reaction after a trade, are directly linked to your subconscious mind and the charges you have stored in your subconscious mind, which is what we're going to spend a lot of now and this afternoon talking about. Then the fourth step is consistently executing your mechanical trading plan with the mindset tools. So consistently doing 2 and 3 over and over and over and over and over and over. Okay? So number 4 is consistently executing 2 and 3. And more specifically, structuring your life in a way that allows you to execute 2 and 3. With your relationships, with your business, with everything else you do, structuring that in a way that allows you to manage all those components. Okay, that's crucial. Now, I'm also going to add a 5th component here. I've been thinking a lot about this, but I really want to promote this whole idea of leverage. So we're actually going to make it the 5 steps to consistent profitability. The 5th step is you have to leverage your skill. And the leverage is done not by changing your inputs, but you know at that point where the inputs meets the outputs? At this point here, it's about leveraging your skill, leveraging your inputs with prop firms, with private investment, with more and more capital. That's the beauty of trading, is that you can do the same thing on greater degrees of capital and make more and more money. So the 5th step here is we're going to leverage our skill. These, by the way, are all your inputs. Once you leverage them with prop firms and private investment, you then have an exponential outcome or output.